Welcome in to another episode of Coffee with CRS in our series on the Big Beautiful Bill, the 2025 Tax Act. I'm Jody, and I'm here with Paul, one of our small business experts here at CRS. He's going to help us break down what the new law means for everyday people like you and me in small businesses. Paul, let's start with the basics. What is the Big Beautiful Bill, and does it come with a tiara?
It doesn't come with a tiara, but it's definitely dressed to impress. The Big Beautiful Bill is the 2025 Tax Act, signed on July 4th because nothing says freedom like new tax rules, right?
So why is everyone talking about this bill?
For starters, it makes permanent a lot of the tax cuts that were set to expire after 2025. That means lower tax rates, bigger standard deduction, and more generous credits for families. It also introduces new deductions and incentives for workers and small business owners.
Can you give us a quick overview of who will benefit from the bill?
If you're an individual taxpayer, you'll likely see lower taxes and a higher standard deduction. For example, the married filing joint deduction is increased to $31,500, and the single filers is now at $15,750. Another thing that's exciting is that families get a bigger child tax credit, now getting $2,200 per child. Also, if you own a small business, there are new and extended deductions like the qualified business income deduction and expanded expensing for equipment. There are also new credits for providing things like childcare to employees.
That sounds like a lot. Over the next few episodes, we're going to dig into each of these changes. But before we wrap up, Paul, what's one thing you want anyone watching or listening to remember about this big, beautiful bill?
The main thing is the law is designed to hopefully provide long-term certainty. The changes aren't just temporary, they're meant to last, so individuals and small businesses can plan ahead with confidence.
In our next episodes, we'll talk about how the bill affects your tax rates and dig a bit more into standard deductions. Thanks for joining us, Paul.
Thank you.